All right, everyone, welcome back. This is the first trading room for this week. Welcome back on a Tuesday afternoon, 3 minutes after 2. I've got my brother Ash streaming live and joining us live from the Middle East.
Good afternoon, brother. Good afternoon, everybody, man. It's good to be on the stream as always, brother.
Man, look, we are doing this trading room together for this session, right? Of course, we're going to be back for the CPI tomorrow, yeah?
Yes, that's correct. That's correct. We got 3 trading rooms this week. We fun-packed. I mean, today, tomorrow, and Thursday, bro.
Yeah, and also not forgetting the Friday Crypto Decrypted.
Yes, Crypto Decrypted. Forgive me, that's true, brother. Yeah.
It's a week filled with trading rooms this week, and I think the guys are gonna love it, you know.
Exactly. And guys, this will be the new norm. Just so you don't know, me and T giving you a prelude of what it's gonna be like, because the academy is pushing. We are pushing. We are making sure that we are giving and delivering great content right at your doorstep.
100%. So just before we get started, guys, remember you can open up an account on tdmarkets.com. Go through and have a look at the types of accounts we have. You can also click, while you're on the landing page, you can also click on Academy or TDME website, right? Obviously, the Academy website will take you through the Academy, and on TDME website, it will take you straight to our TDM exchange website, where you can obviously dabble in crypto on our exchange. Yeah, I think it's gonna be a fun-packed session. I'm looking at the chat there, Ash. We've got Jules, we've got Mark. The usual suspects are back. Now we're waiting for the slow pokes. Yeah,
waiting for the slow pokes, man.
Cool. So you wanna jump straight into it, my man?
Yeah. I mean, look, guys, at the end of the day, myself and T, we're here to provide a lot of content to you guys, making sure you guys are okay. We just want to give a bit of an update, really, on what's been happening. You guys do know that the war situation and what's been happening with the Strait of Hormuz. I think, needless to say, T, we've been covering quite a bit of this in a lot of the opening bells.
Yeah.
And at this point in time, maybe just an update, even although you and I, we're heavily focused on the CPI tomorrow, I think it's just fair that we maybe give the guys a bit of what is happening,
Sure.
Via the Iranian side, the US, and so forth. So the situation right now, at this point in time, the conflict obviously started after the joint strikes by the United States and Israel on Iran.
Yeah.
I think that one goes without saying. I just want to loop back for all the new guys that's maybe here today, right? And some attacks have hit those oil facilities and infrastructure. And the Strait of Hormuz provides 20% of a global supply. And this has obviously turned into a regional conflict now, right, involving several Middle East countries. But what is happening in the strait at this point, all right? It's that shipping route. 20%, like I said, of the world's oil passes through this narrow waterway, and Iran has effectively restricted or blocked the shipping there. So several oil tankers. Now, T, this is a very interesting fact, bro. There's 35 oil tankers that leave daily, but only 2 on Sunday left. That's telling you about the disruption. That's massive, bro.
That's massive.
Definitely.
And
that's massive. And so if 35 aren't going out daily, because the globe needs, over $100 million, 100 million barrels per day to actually manufacture. So if only 2 went out of 35, that's part of the global supply that's being interrupted.
Mm-hmm.
And so many shipping companies are now avoiding the route because of the missiles and the drone risks. And Iran says it may block all oil exports from the region if attacks continue. But here's the response. Donald Trump warned Iran that if Iran blocks oil shipments through the strait, the US will respond much more aggressively, all right?
Okay.
The US is also trying to protect the oil shipping and possibly escort ships through the area. This is the US. Now, remember, you and I, we've been chatting about, who's on the chessboard here.
Yeah.
Who are the big players? And we know at this point in time, 3, the big ones stand out is US, China, and Russia. Those are the three biggest players on the chessboard. People can say what they want. Yes, we can bring in some more of the Asian regional countries there. We can bring in Japan, we can bring in Australia, yes, but the 3 that you see most of the time in the mainstream are those 3. Now, look what the US is doing. They're out in the West, but they're trying to protect Middle East. That speaks to our geographical idea that it's about the US and China. It's about the East and the West, right? So now the impact that this has had, obviously, we know that we've went $100 a barrel, we've gone above, but you've seen the correction, which I want to show the guys, obviously, at this point.
Sure.
And higher oil prices, as the guys should know, obviously lead to global inflation, stock market volatility, and there's going to be a lot of pressure on economies worldwide, rather. So what is the current mood right now? Markets are sensitive, all right, especially to the headlines. Recently, the oil prices fell, which I mentioned now, because Trump said the war could end soon. Listen to the influence of this man, all right? Stocks and cryptos recovered slightly because of this statement that he made. But the situation still remains unstable, because I had mentioned to the guys in some of the classes, yesterday, that there was new headlines that came out that the G7 has put together a team that says that they're going to be giving between 300 and 400 million barrels of oil from their reserves to bring some form of stability into the oil market. All right. Now, I'm not sure from yesterday, the reserves was not released yet. There was no exact time or date when it would be released, but that is the agreement between them. And it seems like that is adding market sentiment and influence and cooling things down now. So, summary of what I'm saying here: the US and Israel, US and Israel obviously attacked. Iran retaliated, we know that. The Strait of Hormuz, 20% of the global oil supply is disrupted. Oil prices jumped, and the US warned Iran that blocking that strait will trigger a lot of military action. So if we look at it from this specific angle now, hopefully I can share my screen there for some of the guys now. Yeah, let me quickly go to my screen there so the guys can see there. I think it should be on, all right?
Yeah, it's on, it's showing.
All right, so now check this, my brother. And to all the guys tuning in right now, very, very, very important. Check this out. So here we have the oil price that pushed up all the way, you can see, to 113. We have managed to come all the way down here. Now look at this RSI. This RSI is showing us that there is definitely divergence and that there has been support that has been found here. Now, where's the first part of the support? Let me just put on, give some arrowed lines here. That's the first area of support right there. All right, that's the first area. Let's see if I can get the others running here for the guys. Okay, just give me a second here. Yeah, here's the second one right there. And here's the third part. So those are three areas of support, which essentially means the following, bro. Check this out. So what I'll normally use from a technical standpoint is to maybe just give the guys a bit of perspective using the equidistant channel. Right now, the great thing about the equidistant channel is this. And bro, there's a lot of people, they know the tools, but they don't analyze how they can use the tools more effectively. I guess that's what we're here for, right? Yeah. To show the guys. So look at this equidistant channel. And I want to just get the guys' attention on a very key area here, or a key component of the equidistant channel. Remember, it is automatically coded into the system, and it has this gap. When I say gap, I'm referring to it has a high and it has a low over there. This is such an accurate measurement of the resistance area and the support area if we're using it as those levels, right? It's so accurate. We don't need to adjust it unless you want to adjust the entire equidistant channel.
Sure.
So what I would normally do, especially if you're trading intraday and you are trying to scalp the market, what I would simply do is this, bro. Check this out. So I take the equidistant channel, and you can see now many guys will rush into jumping in there. I'm waiting for M30 candle close above 88 before I engage here. What I will do is I will actually just contract the chart a little bit. And you can see I have my sessions on as well, London, Asia, and so forth. And I will take this equidistant channel, bro, just using the tool a different way, right? Just a different way. Many guys, they don't use the tools. And bro, I want you to look at this. If price continues, all right, now look at this cross. You see that area there?
Yeah.
That is when the day crossed. So I'll use this equidistant channel now to find distance between where price breaks the trend line and how far it can possibly go up. And look at that, 106 lines up exactly to the place where price not only went and peaked, but when price broke down, it came all the way, which simply means that if we do get a break now above that area over there, look at this. If we get a break, all right, above here and a nice close, do you see how price can go back to 106?
Sure.
Which is what many analysts are considering at this point in time, to say that in the month of March, we're still going to see the surge in the oil prices. Because let's be real, bro. It's not 100% agreed on, exactly what is happening. We're hearing snippets here and there of the new supreme leader being elected, but we don't know what the leadership is holding within their arsenal. Do they want to retaliate? Are they going to open up the strait? What's happening? Trump is threatening because he doesn't know what they're thinking. Let's be honest. You threaten because you want to intercept and prevent if there is some form of ideological shift and change there. Do you see that? So he's threatening them to say, listen, guys, be very careful here. You guys do know if we bomb further, you know what is going to happen. Obviously, the Strait of Hormuz will be shut down further. And this is what we can look at possibly 106.656. So it's not going all the way up to the 114. It's just going back to structural development, which you and I chat about all the time. So that's what I'm looking at this point in time when it comes to the oil price, my brother.
Yeah, and just to jump in there on the oil price there, Ash, I would 100% agree with you. You're on the M15 time frame, right?
I'm the M15?
Yeah.
Yes.
M15.
So I'm so sorry, bro. Let me just add this. I'm waiting for the 30-minute to close above. Sure. And then I am also waiting for do you see there's a 21-day? Or 21 period. I'm waiting for the red one, which is 14. I'm waiting for candle close, and I'm waiting for the 14 to cross above the 21, which gives me more momentum to the upside. You see that? And the RSI above the 55 is what I'm also waiting for there before I take any action.
100%. And you will notice the support you spoke about.
Yes.
Where price is right now is actually testing. I think it is the June high, June 2024 high, around 82.9. It is testing that level. So that's where the support is right now. So I would agree with you. Definitely, we would anticipate a continuation towards the upside from that level. Right.
Oh, got you. Oh, I see what you mean. Right there, where my crosshair is.
No. Go to the weekly. Let me show you.
Let's go weekly. So there's the weekly now coming in.
Yeah, right.
And
so there's look at June. It is the June 2024.
Here we go.
High.
Oh, I see what you mean. Right here.
No, the high.
The zone here.
The high of it.
Over there. That's
slightly above.
Sorry. 6. Let me go. There we go. Over here.
Yeah, but the high. You see where you are. Just go higher. Yeah, that high there.
Oh, powerful, bro.
There we go.
And this is, yes, because it actually broke through there and went higher from there. Oh, okay, got you. Now I'm with you. I'm with you 1,000%, bro. Guys, I hope you're catching this. Yeah,
so definitely on the lower time frame, we're seeing price creating a support, which will then give us a good price action and structure to look for opportunities towards the upside. Exactly what you alluded to there. 100%.
And look at this, bro. Look at this. 2022. Also, we have May here.
Yeah.
It will go back to May. Look at this. Absolutely stunning, bro. Look at that. If you look at it a little bit further, just 2 years before.
Yeah.
It also came down. It's and look at this. The structural accuracy is so powerful. I mean, look at this here. Look at that. It retested. So that would be the trade. 88 to 106. That's a lot of money there. It's a lot of money.
And remember, before the market went down there, you see that high that you pointed to, where your case is just go a little bit higher. That is after that COVID surge in price.
Oh, man, brother.
And then price went down there.
Yeah. And guys, remember, what's critical here, remember, inflation is at risk here now. The guys they are really pushing. If the oil prices keep going up, inflation is at risk. All right. So which means the US dollar, that the cutting of those rates falls back.
Yes, sir. All right. So oil will keep a very close eye on it. That's a good opportunity.
Yes. Yes, yes. All right. And then, brother, Euro USD, should I share that one
Yeah,
quickly?
go for it. Go for it.
All right. So Euro USD, guys, also looking at this one here. Beautiful movement. We have broken above the 1.16. What we're looking at here, if the dollar continues, because remember, with the oil price surging, we're going to get the dollar also moving in a different direction. With oil price coming down, dollar is going to weaken. Okay. So if we get, let's say, 1.17, I'll tell you the number now, 257, bro. That there, just up until there, not a big push.
Sure.
It's already closed above. This is let's see how many pips this is. This is about 86 pips. Very, very nice movement to the upside. And you can clearly see that there's also a lot of divergence here. You can see it. Look at that divergence there.
Yeah.
And there's a lot of power that is coming to the upside. This is a nice correction taking place. But remember, T, this is no different from us with the NFP, because this is where we were. We anticipated the Euro USD to push up because of the bad NFP job losses, the 92,000. And obviously, it was here where we wanted to go up. But then Monday with Iran and you know what happened, that was the dip. We've now closed the gap and we're looking for some further upside here if the dollar, if the oil continues to come lower, we're going to get what we need there.
The target, the level you're looking at there is
117,257. 1.17257, yes.
Got you. Yeah, yes. Nice, quick run through of US oil and of Euro USD. All right. Hope you guys saw it. We've got about 25 people watching us live. Looking at the comments there, people are loving this random Tuesday. We just hit them with a surprise.
Yeah, no, guys. Like we said, this year we're pushing. We're pushing.
100%. All right. So these are the two charts you have for the guys. All right.
Yes.
Then on that note, I'm gonna then share mine.
Yes, go for it, bro.
Let me just do this. There we go. All right. So guys, in today's opening bell, I spoke about I think it was US 30, NASDAQ, and gold. All right. We need to be a little bit patient with gold. And Ash, you'll remember with gold actually went up, my brother.
Yes.
Remember in the session it dipped a little bit, but then it went up. Boom.
Exactly.
Right. So the guys, if you held, you would have made nice profits on that gold. It hit all the targets we spoke about. Now, looking at what's happening on the 4-hour time frame, we can see that price is still ranging. After that supply zone the market reacted from the supply zone. Price fell over 7%. Now we're in the range. All right. You must be careful with ranges. You must be careful with ranges because we need a clear break for us to get a trending environment. We're looking for a trending environment. Structurally, the price on gold is still
that
bullish.
That is such a powerful thing you said there.
Yeah.
We're looking for a trending zone. Guys, that's 100%. A gem right there. You're looking for a trending zone.
Yeah, 100%. We're looking for a trending market. So you must be careful with these ranges. You would want price to break because these ranges are unpredictable. All right. So 100%. So what we're looking at here is obviously how the market is setting up right now. Could be waiting for CPI. So CPI could be the breakout there, Ash.
Yes, it could be.
We are looking for. Yeah. But if it breaks towards the upside, man, we could go back to the all-time high there, Ash, on gold.
And that's a brilliant trade for us, bro, man, at the end of the day, right?
Look, that's a brilliant trade, which, this is exactly what we're gunning for, this possibility. So the CPI, I mean, we saw the NFP figures. We anticipate NFP figures were very weak. Right?
They were very weak. So obviously, if there's 92,000 jobs that were lost, that means logically no jobs, no salary, no spending. So no spending. So we anticipate then the CPI to be worse than expected. But you and I, even although we have our views, we still wait for the data.
Yeah. There's a big but there, right? Waiting for the data. So a weaker dollar, we're looking at gold. I think is one of the charts we're gonna focus on tomorrow, right? A weaker dollar, we're looking at gold pushing towards the upside. And you spoke about Euro USD, just while we're anticipating the NFP for Euro USD to jump up slightly. I'm looking at AUD USD and NZD USD, which also are bullish. All right. I spoke about AUD USD on the previous session, trading room, and we spoke about this possibility that price could tap 0.69693 and push towards the upside, right?
Yes.
This one is already gone. However, NZD USD, there is this potential now. There's potential towards the upside, right?
Wow.
If we look at the daily time frame, we can clearly see that there's a strong structure here. There's a level of support which has been very strong and respected in the past. You combine that with the 61.8, that's where price rebounded from. All right, so now it's trying to pick up momentum. So all we're then looking for is for price just to break out of this channel. It hasn't reached the top of the channel as yet, and maybe Ash, you can also look at the equidistant channel on this one as well. We're looking at price basically breaking out of the channel, and now anticipating how CPI is going to come out. We're looking for that push towards the upside. I'm looking at this from the daily, the 4-hour time frame, Ash.
So I'm quickly gonna check it. Let me check out the equidistant. Whilst you're busy there, I'm gonna give you the numbers now. Okay, I'm gonna give you the numbers now.
Great stuff. So AUD USD is already gone, guys. If you guys saw this, you remember you spoke about this, that we're anticipating the market to go down to 0.69693. However, there's a possibility it can still go down to 69120 and push towards the upside. And this one was the area the market pushed to the upside too, right? You could have also looked at this possibility as well, looking for more setups, looking for the channel to break towards the upside and get like a nice move. I mean, from this break, that is so far about, it has hit 100 pips. It has hit 100 pips, right? So AUD USD moved up nicely. It moved up nicely. Could have been the trade of the week from last week, in fact. So NZD USD, we're waiting for you now because there is positive correlation there. Yeah.
So, bro, I have the level. This is a powerful trade. This is a beautiful trade. It's so the level I have there, and it's so realistic. Many of these guys, they will give you a TP and it's way up there. We say, listen, hold on. Yes, that's long term or medium to long, but we want to give the guy some intraday movement, right?
Sure.
So I got a level there. Quickly put it up there, 0.600.
I'm showing your chart there. So.
Oh, you are okay.
Yeah,
0.667.
0.60067.
There we go. It's exactly at that high there, bro. It's exactly at that high there.
There's even a supply.
Look at that, bro.
There's even a supply area there, right? There's even a supply area I can see. Wow, this is the H3.
H3, yes.
Go to the H4. Let's see if that supply appears also on the H4.
There we go.
H3 and H4, yeah. No, I got you.
Bro, this is it's so accurate. You see, once the guys start learning how to use the tools. Now, I heard someone on social media say something that was so true, bro. You and I, we have to go through some of these things to understand what's happening in the market. And I heard someone for the first time in a long time say this. Guys, you cannot call the Fibonacci a strategy. You can't call the MACD a strategy. It is tools.
Those are tools.
And it's tools. And I heard this from I can't remember the gentleman's name, but in a very long time, I'm talking years now, bro, that I've heard someone say it because it's the truth. You don't have a Fibonacci strategy, all right? It is a tool that you use to trade your strategy. It amplifies your strategy. It brings clarity to your specific strategy. And the strategy is all about the structure, how you view the structural movement of the price, and then use these tools. So this equidistant channel, once again, used a little bit differently, is showing us exactly, look at the accuracy here, bro. I mean, the accuracy is insane. This was when? This was in Feb, high of 2026, and from there, price just started going down. So because price is cyclical, it returns to where it came from. We're not being unrealistic where we say we're going all the way to 64, 63. No, let's grab the pips we can. And then if it breaks there, we talk about that trade.
You just mentioned something that I spoke about even last week, and I used gold and other pairs as an example, that price tends to return to where it came from. So we speak about that level 0.8, is it 60067, where price was before, right?
Yeah.
And price could be easily attracted back to that level because there's also, there is structure, there's also a supply zone there. The guys would remember I showed them gold, that supply zone, and I told them that before even gold reached there, told them that gold is most likely going to get there, 100%.
Yes.
And also the Fibonacci being a tool, equidistant channel being the tool, that's 100%, guys, right? So
it's a tool.
So what happens is, us as traders, we learn how to use these tools, and then we use these tools to develop our strategy, meaning we trade these tools on our strategy. But we can't say that, even though there are people, like, I won't lie to you, I've heard people on YouTube saying, I've got a Fibonacci strategy. Now, what is a Fibonacci strategy? Because it's a tool, they just created a strategy and implemented Fibonacci on top of that.
Exactly.
And
so
structure.
now we label it. So it's all about structure. If you understand the structure, your strategy becomes easier. It becomes easier.
Listen, 100%. If you understand structure, then your strategy becomes very simple, because everything is built on structure, guys, right? You hear these new terms that are around the space. It's all part of structure. And I've spoken to the guys before to say, look, don't be frightened by these new terms that you see over the internet. You've got your FVGs, your this and that. It's all part of structure. If you can understand structure, then you will understand that those things are just terms, right? But
it's terms. Yes. Terms. And bro, and maybe just to add on to the truth that you're actually spitting there, bro, right? There's a lot of guys that we've encountered, obviously, that asks, listen, so what type of method do you use? Do you use supply and demand? Do you use Elliott wave? Do you use fair value gaps, which is obviously SMC, ICT? Do you use a breakout strategy and so forth? All of those are methods that have been studied through behavior, pattern-based, on how price moves. You can use any method you want, but first understand the structure, then you apply the method, whichever one works for you. And I think what we've been doing now successfully in the academy is translating that message to our guys. That is, we're not going to limit you. We're not going to get into a debate whether ICT is better than Elliott waves, because they have different ways of looking at the structure. So you can't really say Elliott wave is better than ICT. It's different ways of looking at the structure. You just have to find what works for you.
Exactly. That's it. You just need to find what works for you. And I also preach this to the guys to say, look, there are different, and I like to make examples with cars, Ash. I've seen certain drivers who are comfortable driving while their seat is a little bit back, right? And then obviously some drivers will drive with their seat in front. No one is right or wrong in that scenario. It's just what works for you, right? So just go with what works for you, definitely.
You know what is so interesting to what you're saying there? The only difference is risk management, because if you're sitting way back, you're at risk. If you're sitting way to front, it's also a risk if you break suddenly, So it doesn't matter what method you use. The difference is the risk management between them. What you're gonna do.
and in that we learn to manage our risk. Whether you're driving like this, sitting in front like this, or you're just cruising at the back like this, learn to manage your risk according to what works for you. Hey man, guys, I hope you guys are enjoying this. Just put a fire emoji on the chat so we know you are listening, you are with us. We giving bombs here. We're dropping jams and bombs here. 25 people watching us live on a Tuesday. This is the prelude to the CPI, which is after the NFP, this one. Analysts are looking at it.
Yeah. Absolutely, bro. Do you have anything else there in your arsenal, bro?
Yeah, sure. Definitely. I've got GBP JPY here, which I spoke to the guys last week, right? And look, guys, what happened? We got a break towards the upside. We had two possibilities on GBP JPY. We either were going to break towards the downside or towards the upside. And this is because of this formation, right? This is called the contracting formation. Some people may call it a triangle. It's all good. But GBP JPY, we have now rallied over 120 pips towards the upside, all right? So at the moment, if you are looking at this, you would notice where price is testing this high now. If you're in a position already, this is where you would want to manage your position there, all right? And then from there, we just waiting for price to just continue pushing towards the upside, like giving us an impulse, retesting this zone, because this is going to be a nice zone for a retest or to get a retest from, right? Look at what happened in the past. In fact, if we take it all the way back to January, you would notice that's been a respected area of previous resistance becoming support and so forth. So if we can get a break and retest, then we're looking for a continuation towards the upside. That is GBP JPY, just to give you guys an update on that. We also spoke about Euro JPY, and I can see, Ash, you are looking at it on your end. You've got the equidistant channel, so I think let me share your screen, yeah. And
okay, for the GBP JPY, no?
Yeah, no. Right now you're on Euro JPY, yeah.
All right, so let me go. Yeah, sorry, that's okay. So Euro JPY. Let me just see here, bro, because if we're gonna get this here, this thing is gonna really push up. This thing is gonna push up. Like, look at this. Needless to say, look at that. That's it. 184.
Yeah,
which is back to those areas there. But I mean, you know, at this point in time, the yen has been a bit stronger, even against the dollar. So that correlation might just feed into the euro yen as well. Obviously, we have the euro USD. That's a challenge there. All right. Let me just go to the GBP yen. So that, you said you're looking for possible upside there as well.
Yeah, upside.
All right, so let's look at this here. Yeah, that euro yen, man, you know, it's at a very interesting place. Look at the structural development here. So many guys will think of this as the start of the push to the upside, yes, but it could also just be a lower high, because that is the high there.
Okay.
You see.
Yeah.
So in as much as this looks like it could be going, look at that area there. That's strength. Do you see that? And then you have this area which is higher over there. So at this point in time, that was actually the lower high. Think about it. Strength came up, right? Yeah. Lower high. This is a correction that's taking place, but the correction, look at that. It's not higher there. So this impulse here is much lower in strength compared to this one, which tells us that this is just the dramatic view of the candles. It doesn't necessarily mean that price is going to break all the way to the upside. You see that? Because the yen might just surprise us here. It might just surprise us. And if I look at it just from a dropping perspective, do you see there's actually no higher low in this specific proper higher low in the structure? Because the higher low is generally a very deep push in. This is obviously just the momentum that pushes it up, all right? Because if you go to the higher time frames, do you see there's actually no higher low there? It's just momentum being pushed up every time. Do you see that, bro?
Gotcha.
Even if I go to the daily, look at the daily, no higher low. So we might get a higher low here first, then we push up, which will be fantastic. So if I do this, if I look at the 3 hour, or the 4 hour even. The reason why I'm using those ones is because the 4 hour is the start to the more higher, not higher, more long-term movement. All right.
Yeah.
So look at this now. Check this out, bro. So that is the low that we're working with, right? And this is all right. So if price had to come down, now I want you to be very, very open-minded here first. All right, so it's at 212, all right, 212. And if price had to come back down, all right, there's two areas that it could go and hit. So watch this, there's two areas. So the first area, let me just see if I can find you can see that the changes here, am I right?
Got you, yeah.
All right, I'm just quickly dropping down to see if there's any. All right, so can you see here? This zone is critical. That's closed at 43. This one closed at 42. So I'd use this zone, that area there, right? And then I would jump up to a much higher time frame, like an hour, so that I can now understand to say, okay, so that zone touched, and there as well. Look at this, there, and then you see this here. So 212, there's 3 trades here. I do not foresee this thing to go all the way down, to be honest with you, bro. I'm sure you can agree with me that we're not going to expect it to go all the way down to 209. Exactly. So 211, and then if we might go as far as 210, but that's it. Then we have our higher low. What's the daily now? Look at that. Look at that. You see that higher low there at 210 max, and then we push up again back to that area if we get that correction. Otherwise, we go up to 213. It's either we just pause here temporarily, then we go up, or we go up straight. One of the two. It's going to happen.
And also that higher low you spoke about, there's also a possibility that you see on the daily, that daily resistance we in, there's a possibility that we could get a break of that first before that higher low forms, right? So there are 2 possibilities here. It could hold and we get that higher low from there, or price might just break, give us a higher high, followed by a higher low first. So so I see, I see, I'm with you there.
So those are the 2 zones that we're looking at, either 211 or 210. And then from there, we move on. We move on.
There we go. All right. 100% jam-packed analysis for you guys. I want to jump to euro yen. Not euro yen, but euro pound. All right.
Okay, lekker. Yeah, listen, there's been a drop on that one, eh?
That's the drop I spoke about on, I think it was on Thursday, on whenever we had a trading room. That there's a possibility we're going to go to where price is actually right now, because we saw the break of this trend line there, and obviously with how price reacted previously, and then we got that push back down there. It was just about 50-60 pips that we anticipated. But from there, we still have this low here. We still have this low where we could see price go as low as that low. All right. So I think there's still more downside and opportunity all the way down to that low. So it's a very interesting one, a very good one here.
I see it. I actually agree with that, bro, because I have, on the Euro GBP, that area, do you have 0.86094 there?
Let me just
0.86 904. 904. Yeah.
904, 86904. I have it there.
Is it? No, hold on, bro. Are you sure?
0.86904.
094.
So 86
094.
094. It's on that low.
It's on that low there, huh?
Yeah.
Okay, got you. Perfect. Yeah, there we go. That's it. I agree with you 100%. I agree with you 100% on that one.
So a further push down to 0.86094. Proper one.
Yes.
Proper one.
Proper.
And if the guys are holding some sells here, where the market is, it would be a good time to manage your positions, right? Whether you're scaling out of the trade, you are trailing your stop losses, because we still have this previous structure that might be a little bit of a problem. But in terms of the overall structure that's forming at the moment, we're anticipating more downside. All right. We can't ignore things like this. Yeah, definitely. So Euro pound, that's a good one. A very good one.
Very. Wow.
Right.
Okay. I mean, look, guys, everything is a prelude to tomorrow. So we're just doing a bit of homework. Obviously, we're waiting for tomorrow's data to come to see what's happening.
Tomorrow, we're going to get into the crack of things. Just going through the chat there. Today it's a quota special, bro. Do you eat quota?
I've had a quota before. But they obviously make them.
How long ago was that?
Yeah, it was some time ago, man. But I mean, quota's a quota, right? But I guess some guys will debate, hey, Ash, what are you talking about? It's at a certain place that you have to eat it. If you don't eat it at that specific place, it's not a quota, so, but
I think a lot of people will agree that the best quotas are the ones from the actual township,
Yeah.
But look, I won't lie, where I live, you know, you wouldn't expect to, you know, to have kotas around, but there's a good place, bro, that sells good kotas, bro, where I live. You know, I'm not gonna say the name.
Yeah.
You know where I live.
Yeah.
So there's
I know where you live.
So there's good kotas here. So I'm looking at Kingsley there. Say today it's a kota special here with all the ingredients inside. Ash and tea for the trading room. I tried to say we are the ingredients, Kingsley. I don't know. Maybe clarify that for us. Are we the ingredients?
Well, good quota, eh?
For a good quarter. I'm seeing a comment there. Check German 40. All right, we've got German 30 on our platform. So I'm gonna go to German 30. All right.
Yeah.
We've got German
Yeah,
30. Let's see, German 30. All right. So as you look at German 30, I think I've got the analysis that I did previously. Let me just check if I didn't maybe remove it. Okay, so with German 30, we spoke about this possibility, right? We spoke about the possibility of the market coming back down to this low. When it was going down aggressively, we spoke about the possibility of the market coming back down to this low, tapping this low. So that's where it is, and then we're already getting an aggressive reaction towards the upside. So it's very simple, this one. I'm going to use the higher time frame. So we are still within a bullish structure. The lower time frames might be creating a descending structure, but we're still in a bullish structure. So I would anticipate German 30 to head back to, you know, as a short-term target to head back to, let me just look at this price here. It is around 24280. 24280.0. Yeah, 24280.0.
You actually spot on. Go to the 4-hour time frame. You're going to see there's a possible inverse head and shoulder there.
Got you. I'm on the 4-hour time frame. Yeah.
Yeah, look how it's possibly forming there. Look at that.
There we go. Aha, I see it. There we go. Yeah, I would anticipate more for the upside on this, you know.
Yeah, for now. Yeah, short to medium.
Yeah, definitely. So I can see on the 15 minutes time frame, the market, before it created this bullish structure, it actually broke out of the previous bearish structure. And then now we are creating higher highs and higher lows. Yeah. So on the M15 time frame, I think it's gonna be like a good opportunity, tapping that structure and continue towards the upside again.
I can give you a quick one there on German. Just if it does push above and it is a head and shoulder, inverse, we could go up to 24772. 772.58.
Okay, let me put it in there. So that's 24775.
No, 772. 24772.52.
152. Aha, I see. Okay, I see that high.
Look at that. Yeah. Quickly put in a 4-hour there, or 3 or 4 hours fine.
4 hour. Yeah, I'm on the 4 hour now.
Do you see how nice? That's actually a nice trade. Going back to that area of consistency. If you zoom out, look at that.
Aha. Oh,
right back there.
There we go. Okay.
You see that? That's a beautiful, beautiful trade, bro.
Yeah. No, we're anticipating more upside on German 30, definitely. On German 30, I think it's gonna be a good one for today, or possibly for the rest of the week. You know, we are. It's Tuesday today, so it could be for the rest of the week.
Exactly.
Yeah. All right.
Okay, no, looking good, man. Looking good, man. I think it's looking good, bro.
Yeah. No, it's looking good, guys. Remember, this is just the prelude to tomorrow, so this is what you can expect and more tomorrow. For today, this is what we have for you guys. All right. We still have the Thursday trading session as well. So it's Tuesday, Wednesday, Thursday. The Friday one is the crypto decrypted. All right. So just be patient. CPI, we're gonna talk more. Yeah, Ash?
Absolutely. Couldn't agree more, brother. Let's push this thing, guys. We're looking forward to that CPI tomorrow.
All right, definitely. Guys, I think this way we're going to end it for today. Thank you for joining us. Please subscribe if you haven't. We have reached 32 viewers live. Please subscribe, like, share, comment, and we will catch you guys tomorrow, same time, same place. All right? Yes. And that's it, guys. Cheers.
Have a good one, guys.
Have a good one.
Cheers.
And enjoy.
Ciao, ciao.